Hi, I want to introduce you to Jack. As a small boy, Jack worked out very quickly he was good with numbers. He knew exactly how much money he could save in his piggy bank if he actually never spent any of it. One day at school, Jane came to give a talk. As she spoke about herself and her job, Jack felt like she was describing him. He felt an inner peace, a sense of destiny. He was going to be an accountant. Jack joined an accounting practice and became proficient counting widgets in places he'd never heard of and accounting for every 6 minutes of his life. He discovered that accountants were more than just good with numbers. In fact, they provided the foundation on which every good business was built. They advised, they coached, they reported. They were, in fact, a trusted advisor. Over time, he was given more and more responsibility until one day the ultimate honour was bestowed upon him. He was asked to become a partner in the firm. He jumped at the opportunity. In hindsight, he really should have asked to see the practice accounts first. He set up multiple entities to hold his substantial future wealth and protected from the errors of his colleagues and future relational challenges. As he settled into his new role as partner, he noticed that most things were the same, but that there was one key change. He was now responsible more than ever for bringing in new business to the firm. This had not been too hard early on, as he'd passionately spoken to those around him about his work, and they had introduced him to new opportunities. But over time it was getting tougher, and he wondered why. He found that those that had traditionally referred him business were not feeding him with the same number of referrals. Clients coming to him already knew what they wanted in a way in which they never seemed to know, and they were talking to the competition and pushing him on price more than ever before. He knew that they had some great processes in the firm. When they completed any client work, every step was clearly identified, measured and signed off. When someone wanted to spend money on anything, it was carefully evaluated, assessed and reported on. When a new person was hired, there was process both to select them and then to induct them. But when it came to marketing and selling the services of the firm, they did not seem to have the same rigour. They did do some marketing. They built a website, sent out a newsletter and published reports. They jumped on the social media craze, linking in and tweeting. They ran events and sponsored a few things, but no one seemed to know exactly what this was achieving because there was very little measurement and follow-up. As Jack looked around the partner group, he noticed that some were good with just numbers, while others were good with numbers and lunch. Handicaps were coming down, fine wine was being appreciated, but there was little accountability around these activities and the new business results they generated. He saw that clients and potential clients were interacting with staff at all levels within the firm, and damage was sometimes being done and many opportunities missed. For some reason, clients in one part of the practice were not being introduced to the other services of the practice, and little kingdoms were being built. Slowly, Jack started to realise that revenue creation, marketing and business development had very little process around it at all. It relied on the strengths of a few individuals, but there was no common language, process, measurement and accountability. Welcome to Revenue Performance Management.